So market structure can also be quite useful in helping us determine targets for a trade. So what we see in front of us here is previous price action that occurred about a year ago on Bitcoin. And as we can see, it appears as if price is making a series of higher highs and higher lows. So without really understanding market structure, or with a very basic understanding of structure, without realizing the difference between, say, internal structure versus primary structure, and what constitutes, a topping point in terms of structure, using, for example, the price range tool and looking at highs or seeing weaker and weaker breaks of structure and using what I call the common sense approach, then you may have a very difficult time judging this for what it is. And instead of looking to possibly wait for a transition to go short on, you may end up longing the top, like many other folks that think they know what they're doing in terms of structure. So what we have in front of us here is indeed an internal uptrend. And I say internal because despite it looking primary, because yes, you broke this high from left to right on the 4-hour time frame, it's still internal on an even higher time frame. Let's check the daily. Well, using what we already know about market structure, according to the rules that I gave you guys, price came down, price came up, price came down. And even though it went up, down, up, down, up, down, it's never revisited that low again. So there was no true confirmed lower high that was shifted, right? We didn't go like this, and then this, which would have indicated a true shift in daily structure. We don't have that. So we can't look at that. So instead, technically speaking, this could very well just be one big gigantic lower high on the daily time frame. So knowing that and watching structure develop on lower time frames, is this possibly setting itself up for a swing-based short trade? Absolutely. This is how I get those gigantic trades every time. It's all based on structure. And it's based on the fact that I realize that, hey, the primary structure low has never been taken out. So I'm basically between this point right here and between this point right here as it stands. It still could go higher, absolutely. But the second that I see a proper transition, because each higher high, as you can see in the 4-hour time frame, is becoming very, very weak and wicking all over the place, that's indicative that shorts are likely opening, or the composite man is opening short trades, trying to go short to take out a major target such as that swing low in question on the daily time frame. So smart money would not be looking to long these areas here. And if they were, they would be scalping, not swing-based trading. So in this case here, we have our lower low in the daily. We were able to identify that very easily because we started with our top-down analysis and we skipped the 4-hour before we marked anything in. We went up to that daily time frame. We made sure we knew where we were on the daily and what was going on. And now what we're going to do is we're going to go down to the 4. Okay, so where's the next 4-hour break in structure? You don't have to start from way the heck down here if you don't want to. As long as you can identify it from the halfway point or so, that's perfectly fine. So I'm going to start my structure pull right here, actually. So I can tell that price went up, price went down. Price came up and wicked. Price came down, made that higher low. Even though that's a wick, I'm still going to mark this as a higher low. Price came up once again, and if we zoom in here, you can see this better. Price came down with more than 2 black candles, making that final higher low, and then one final wick before actually breaking structure from left to right. So this is a good example as to how we're able to use structure points to hit take profit levels or an order flow objective. The order flow objective is a narration of what you think price is likely to do, or what makes the most sense based on many factors. Factor 1 is liquidity. Factor 2 is market structure. And factor 3 is supply and demand. That is the order that we take the approach based on. Okay, so liquidity overrules market structure, and market structure overrules supply and demand. If you remember that order, you will do a lot better with your order flow objective. So based on a very simple-minded order flow objective, I would say it all boils down to not only liquidity, but also structure, which are pointing at the same figure. That figure is that this low should indeed be the overall target of a move like this, because we now have a proper transition in 4-hour structure from a primary standpoint. we are seeing exhaustion on each break, even though it's not a break. There are SFPs all over the place. We are not seeing actual closes above at this point in time. We have seen the break in structure, and the daily indicates that a lower low was put in. We have never taken that low to represent an accumulation and to represent a proper structural transition from a primary daily standpoint. During that bear market, we have to see something like this to really flip bullish, of course, and we haven't had that. We also see that price came up and made a higher high with this 4-hour, 12-hour uptrend, whatever you'd like to call it. And in the process, if you look even closer, you can see that you have that curling up effect on liquidity. Price is absolutely leaving behind a majority of these higher lows. Okay, a majority of them have been left behind. For what reason? Well, to help with that daily bearish structure break, that swing-based play. So believe it or not, there are many folks that would have positions from, say, here, heck, even all the way down here that really do believe they caught the bottom on Bitcoin and more than likely had their stop at break even or under those lows still. And many liquidations would also fall around those levels as well. So in this case here, using the classic OG Phoenix liquidity curve, we can have a better representation of what is to be expected and what the order flow objective would be in this case in particular. So what we're expecting is a down move based on structure. But is that it? Like, is that all we can do based on market structure on this high if we have entered short like we have in this example? Not really, no. What we can do is we can also apply things such as using these 4-hour structural points or all these higher lows on the move up, because we do realize that there is such a thing as internal higher lows and primary higher lows, and we can use those as targets. Maybe we want to take a partial on this one. Why would we take one on that one? Well, I mean, why not? Because what happens if it SFPs? Well, that could indicate that we have a possible weak high. So we don't want to go with that. We don't want to risk losing the trade based on a silly SFP. So why not take a partial out on that low? Okay, well, let's draw this low. Without knowing structure, you would probably pick this low right here. But is it really that significant? Not at all. This would be the more significant low for sure. It's still an SFP level, according to the majority and how they look at SFP levels. It's still a liquidity level, don't get me wrong. But if your liquidity level does not actually produce a valid weak high or a valid weak low based on local market structure in some way, shape, or another, then really you shouldn't expect a whole lot from that liquidity level in particular. So in this case here, because this level does not produce a weak level, and I'll show you guys what I mean. We're going to hide this out of the way. We're going to wipe all this very quickly. So we have this level here. So if we draw that structure back in on the 4-hour time frame, we had this guy, he broke across over here, down to here, he broke across right here, down to here, and he broke across up here with not with the closes, but with wicks. So what that tells me is that by closing or wicking this low here, it doesn't really do much from a structure standpoint, because in theory, what was important was obviously this guy right here. That showed us that, hey, we actually have that proper transition and structure now. So now that we have that proper market structure like transition that occurred, if we get an SFP here, does that make this high a weak high? The answer would be no. The reason why that would not be a weak high, even with an SFP produced move from this low, is because if you follow your structure onwards, you now would have a point here. So does this high relate to this low? No, it does not. This high relates to this low because this is the low that created that high. This low created an internal based high based on this pull, up, down, up again, which just so happened to co-align with a primary high. So what that indicates is, should you have had a SFP over here, then yes, it would have made a weak high based on local structure, and that would have been what I call a tradable SFP level. This would have been the weak high in question, because then you could argue, okay, the job of this high failed to break this low, which is the low that created it. And because it was unable to do so, price came back for that high. Now, of course, it didn't really do that. I manipulated the example. But the point is, you have to be careful when it comes to these levels, right? You don't want to pick every single SFP level known to mankind or what you think is a wick and say, oh, that's going to do something significant, because in reality, if it doesn't present itself using local structure or in conjunction with local structure, it doesn't really do much. It doesn't have to do much. But what if price were to come down and do something like this? It makes a lower high, and then it takes that level out. And you get something like this. If you had a situation just like this diagram, or this drawing rather, what that would indicate is that you do indeed have a weak level. And many people may be scratching their heads right now saying, what is this guy talking about? Well, what I'm talking about is because local structure is now in confluence with the previous SFP level, or it appears to be, you now have a weak high. That weak high would be right here. Not up here. It would be right here. Does it relate to this guy in particular, though? No, it does not, actually. It may appear that way. 99.9% of folks would say, oh, that's because we took this level here. No, it's not. It's because you took this level here and you SFP'd this level. It has nothing to do with that previous SFP level. This is all that you needed. You didn't need this. Does it help to have an extra liquidity purge on a previous low? Yeah, I mean, why not? It's extra liquidity that was engineered, which gives you a greater chance of coming up. Absolutely. But is it a requirement? No, it's not. No, it's not. Not if you have a situation like this. No. So again, very, very important that you guys realize that in accordance with weak highs and weak lows, you have to look at local levels. It has to make sense with your current structural drawing. If it does not, then obviously you need to wait for something like this, right? Where structure ever so slightly front runs that level, forms a range-bound environment, then sweeps that level. And then, of course, it's fair game from there. But what if you had a situation like this? And it still looks like an SFP of that previous liquidity level. Technically speaking, using the rules that we talked about, this is not a weak high. Could it still produce a move up? It could. It still purged something. There were still dollar signs to be taken over here. But does it have to? No, it doesn't have to. It's not what I call a high confidence trade. This would not be a high confidence trade at all. I would need to see more justification before flipping long in a situation like that, especially when the overall narrative is clearly down based on the way that we've seen the transition at the high here, based on the liquidity curve, based on the fact the daily primary structure is exhausted, or the internal structure is exhausted, and the daily structure pull made sense to come down to here to continue its bearish overall trend. And just as a recap, we have this on the daily time frame: down, up, down, down again. Just like with most moves, we had that curvature up and then a move down to follow. So using these market structure ideas to build that order flow objective is going to be a thing that you should be practicing every day. It's something that you should be building off of every day. And not only is market structure going to help you with targets like so, it's also going to help you with your take profits, with your stop losses, with everything that you do in trading. If you just wait for market structure to be in your favor, or you wait for the market to show its hand, and you become, as I say, one with the candlesticks, you will do a lot better in your overall trading environment. I can promise you that much. So, for example, if I seen a situation like this, I'd say, okay, we didn't quite hit that daily structural point, although there's a high possibility we're still going to do that. And because what this is actually a range-bound environment, price is allowed to go up, down, up, down, up, down. It's allowed to break structure from here to here, okay, using range-bound theory. And in that case, that's exactly what happened. Price decided, I'm going to break that because there's inefficient price action over here. I'm going to range a bit, trap some more traders before ultimately pulling down into here. Maybe a distribution needs to happen. Maybe something significant has to actually occur first. But if I was in that trade, yeah, my stop loss would have been hit. I would have let my stop loss get hit right here. That's close enough to that low that, you know what? I probably would have been taking profit out here based on the fact that we took these lows, as they would have been partials for me. And then I would have let the rest take me out. It is what it is. Sometimes you just have to accept what's in front of you because structure has turned against me. My short idea was up here. Structure turns against me finally down here on a higher time frame. Even though it's internal, even though it's range bound structure, this is where we look for new trades and we don't get, we don't dwell on the past is what I'm getting to, right? So now we can look for yet another trade. All right, so let's see how you would approach this. So you had that structure transition, but again, because the overall target and in the narration of the story is to come down to this low, I need to see something more convincing than simply just one pump up to say, oh, you know what? I'm going to look for every single long now. We're going to target that high once again. So the idea is that you should see the low being engineered in any notable move for confidence. So if you have a downtrending environment and price finally finds a low, or what you think could be a low, and then it pumps up quite a bit actually, unless that low is engineered, then I'm not very confident that it has to go something like that and start a new uptrend. I like to see when the low is engineered for a high confidence based play. That's a very, very crucial point that we'll be getting back to. But for now, what we see is we did not see this low being engineered at all in any way, shape, or another. And we've seen that price decided to break this internal structural drawing from low to high to lower low to lower high to lower low to break a structure. All right, let's see what happens here. So when you have a move where you have this very, very aggressive expansion away, very, very aggressive, a quick sell to buy, and price decides to come down as fast as it went up or very similarly in terms of time and aggression, a lot of the time you are bound to go lower. Okay, a lot of the time you're bound to go lower because what happens in situations like that is all the people that longed in here and their stops are all over the place and their liquidations they're all over the place. It's like a domino effect. You push one domino over, they all fall down. Very, very similar idea. It's a cascade of liquidity essentially. Very, very common phenomenon. So like e.g., if price decides now I'm going to start breaking down pretty low here, maybe to this point, what's really holding price up here is the question. I mean, using smart money based concepts, not very much. Now, I'm not going to look for order blocks right now because I can tell you that if there is an order block, it's going to be a lower time frame order block. And even though, yes, there could be an order block, the overall objective based on what we established earlier is still very much down. It's down towards that overall low that we discussed, right? And we haven't quite taken that low. And if we expect Bitcoin to pump up bullishly from here, we need to see that low engineered. We want that liquidity taking. We want that liquidity engineered. So let's see how price actually progressed. Oh, look at that. Now, because it's dumping down so aggressively in this example, what does that tell us? Well, that tells us that this could be a sell to buy to sell again, meaning that price very well could come back for this low despite there being an order block there. And how does this play out? It plays out just like that, right? Price decided, nah, I'm going to come down. I'm not going to let those guys have a chance. And we're going to go lower because we haven't quite taken out this main primary low just yet.